Hey guys, Max here, and this is your daily market update for the 9th of December yesterday. Today we're going to look at the markets, Evergrande, a slight hiccup for a Chinese AI company, the European Central Bank and their cognitive dissonance, along with decentralized finance and its apparent reliance on Amazon. So once again, volatile markets have changed their tune on Omicron. Yesterday they were all bullish as hell, yet today they halted their rally on what is really, again, mixed news. Seriously, none of these rises or falls based on early Omicron data make any real sense, and it's all just random market sentiment and investors' random guesses, speculation on what might happen. There is some possible data saying that Omicron is 4 times more transmissible than the Delta variant, but again, no one really knows if this is true or not. We're just going to have to wait and see. There's also the same news of it not being as dangerous or not causing as many hospitalizations or deaths as we'd expect from the other variants. Sadly, on this potential transmissibility, the markets lost a few points. The Nasdaq fell 1% after having a strong 3 days, reversing its gains. The S&P 500 as a whole fell a little bit, as well as the VIX spiked a little to 22. There was actually some real good news though, and that is that the US jobless claims came through and they are at their lowest level since 1969, which is very nice to see. It means though, even though labour force participation rate isn't very high, the idea that people just aren't looking for jobs is true, which is, I guess, better than people looking for jobs and not being able to find them. Not an ideal situation, but far from the worst thing we could have heard. Sadly, we are going to get inflation data coming through, and of course I will make a video on that, but that is not looking good at all. The consensus for that is 6.8% inflation a year, which is huge. That's almost 7%. And the real problem with this is that if inflation comes through at 6.7%, the markets will think it's good news because it will beat the consensus and they'll claim that 6.8% was priced in. If, however, the CPI data comes in and it's above 6.8%, it's 7% or even higher, then obviously that's going to be awful, awful news. It's going to accelerate this Fed's hawkish turn. They're probably going to accelerate the taper. They're probably going to raise rates early in 2022, not in the late of the year. And that's going to be very bad news for the markets as a whole, but it's inevitable and it's going to happen at some point. It doesn't really make a difference if it happens 6 months earlier. Crypto also had a bad day, dropping across the board by about 5%. At the time of making this video, Bitcoin was sitting a fair bit below $50,000, erasing the gains it made over the last couple days, but the market as a whole has dropped. BuzzFeed, a company that I didn't even know was going public, lost 40% of its value on its first day out of nowhere yesterday, joining the likes of DocuSign as a company that was just overvalued, presented as some kind of grand tech company, but had no real path to justify its valuation, not to mention putting out some of the most insufferable content the world has ever seen. Of course, there's also a good chance that this new Evergrande news that Evergrande has finally defaulted has scared some people, changed a few investors' risk tolerances, and that could help explain some of the volatility we've seen over this last day. Now, speaking of Evergrande, as I just said, they have now finally officially defaulted. This is obviously huge news, but I'm not going to go too in depth here in this video because I've got a second video coming out later today exclusively about Evergrande. In short though, the company has been teetering on the edge of bankruptcy since September. It's always been just a matter of time. They couldn't pay a dollar-denominated bond yesterday, which was the final straw that broke the camel's back, and they officially defaulted. In fact, it's so bad that Evergrande hasn't even said anything to the bondholders when they came to ask them why they haven't been paid, and Evergrande are just turning off their phones and ignoring all their calls. This now means that $20 billion of debt from Evergrande is now practically worthless. The CCP is claiming that they are going to help restructure their debt, but to be honest, there isn't really much they can do. Soft nationalization is looking pretty likely. The CCP will probably take control of the company, or at least most of the company. They've already taken over some operations to this day. They'll keep it running and they'll stop it from collapsing outright. Investors, especially foreign investors, institutions like BlackRock and HSBC are going to be holding the bags and taking the huge losses because the CCP doesn't care if they take losses. Obviously, more developers are going to fall. This is nowhere near the end. This saga will last at least another year, and you can expect to see news like this, like Kaiser and Fantasia, other property developers defaulting and collapsing as well, just like Evergrande have. As the Chinese economy is already tanking, this is just fuel to the fire. Funnily enough, S&P Global Ratings literally the other day came out and said that Evergrande default is inevitable, just a couple days before they finally defaulted. And this is pretty ironic if you ask me. Most people who are actually clued up and who aren't just worried about always being right, but saying what they actually think is going to happen, have been calling for this default for months, like myself. I've been saying that default is inevitable since September. But S&P Global Ratings, a company that is supposed to quantify risk and help the markets manage it, well, they waited until 2 days before the company officially collapsed before giving their verdict. They pretty much failed to do their job. Unfortunately for China, there's more bad news, as the US will blacklist a Chinese AI company called SenseTime, right as it was hoping to IPO. It's a facial recognition software company that has been identifying Uyghur Muslims in Xinjiang and aiding the CCP in their repression of that ethnic minority. Now, I'm going to make this very clear. This is a good thing that the US has done. We should not be investing in companies like this, but more importantly, we shouldn't be allowing other people with less morals to invest in companies like this either. Do not listen to the CCP shills here in the comments section when they say that this is an authoritarian dictator move by the US. It's without a doubt a good thing for humanity. Sadly, though, the West is still involved in this sort of thing, with HSBC assisting the company with their IPO and other US early investors owning parts of the company. Really, though, what this does is it highlights the risk of investing in Chinese companies, not only from the CCP regulatory authorities, and not only from VIE or ADR company structures, but from the US and the West and their regulators as well. Investors here will lose money, or they won't make as much money as they otherwise would have, but it doesn't matter if they lose money because of the CCP or the US. The end result is the same, and all investors in Chinese stocks should be aware of this. Now, in European news, the European Central Bank has been warning that quantitative easing inflates assets. Yep, seriously, they're warning us that what they've been doing for the last 2 years is inflating assets, as if we are absolutely brain dead. It almost seems like they're trying to push the blame onto their populations or the people who elect them into power, even though they aren't elected, and not take responsibility for their own actions. Obviously, this is absolutely absurd, and it is a problem of their own doing. They came out and said that the benefits of QE might not outweigh the cons anymore, and yet they're still not changing their tune and still going ahead with asset purchases and keeping interest rates at 0%. They're literally trying to rewrite history as we see it. In the future, they will point to these statements and claim that they warned us of the potential risks, despite the fact that they are ignoring their own warnings. This is pretty shameful from the ECB, but I've come to expect it, and you shouldn't expect anything less either. Now, in DeFi or decentralized finance news, a network called DYDX maybe, I don't know, I've never heard of it before this, but it's come under criticism because it turned out it was entirely reliant on Amazon Web Services for operations, despite claiming to be decentralized. How do we know this? Well, Amazon Web Services went down on Tuesday, and the DeFi protocol followed, as it isn't actually decentralized as they claimed it was. Funnily enough, this is a little bit similar to what we see happen with Solana a couple months ago, when the network was shut down all at once at the will of the developers, which proved that Solana wasn't decentralized either. Somehow though, everyone just kind of ignored it, and it's now almost entirely forgotten about. You won't see anything about it on Solana's subreddit, for example. Now, before the fanboys rush down to leave their futile comments, I'm really not that pressed about Sol not being decentralized, because I don't own the tokens, so I really don't care what happens with the network. The token holders, however, should be very worried, and they should be pushing for improvement, because the developers have taken you for a ride. Sadly, this kind of thing is actually very common. It's very easy to claim that your protocol is fully decentralized. It's very easy to write a nice white paper, but very rarely does everything turn out to be true, and similar stuff is happening all over, even with very well established projects like Evergrande and Solana. Just be careful. Decentralization is great. It's a very powerful and useful tool for humanity, especially in the finance hype. Just don't get consumed by the hype. Stay objective, look for truly decentralized projects and support them with your capital if you want. Finally, JP Morgan has come out with a financial product to protect hedge funds and institutional investors against meme stock shocks, which is hilarious in my mind. Obviously, GameStop and AMC were heavily shorted, and their short squeezes and gamma squeezes and just the pump in general has cost companies like Citadel billions of dollars. Funnily enough though, there's going to be a meme stock ETF coming out soon, and JP Morgan is jumping on the bandwagon through trying to profit off of the other end, basically creating a screening tool that is supposed to provide insight into the likelihood of a company becoming the next meme stock. I think it's pretty crazy to see how much of an influence something as innocuous as a subreddit can have. It's crazy how far Wall Street Bets has come and the changes in the industry it is pushing forward. Now, full disclosure here, I never really got into this whole thing a huge amount. I do hold a couple grand in AMC that I bought back in February and forgot about because I deleted the app it was on. To be honest, I'm happy to let it sit there forever and provide some more support to the apes when this comes up in the news. Keep going strong, you apes. You guys are awesome and you are actually having a real impact on finance and the world in which we live. Congrats, keep it up. That's pretty much it for today. Thanks for watching. I'll be back in tomorrow, of course, with another video, probably looking at inflation data. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.